The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking your trading day off right here, and we pick things up in positive territory yet again. Quite the sell-off in the final 30 minutes or so of trading yesterday in the S&Ps. You drive from 67.15 to a low at the close last night. What's the low, folks? 66.66 to the tick, not even a decimal last night on that flash low in the markets. And I say flashes, and that was some selling, man. The selling we had, you're talking about almost 90,000 contracts on that 5-minute basis when the things escalated at about 3:30. But it's been a one-way trip from last night's close to where we are this morning. S&P's up 46 points, or 0.7% in the green. NASDAQ 100, we're up by a full percentage, 25,004. We got banks out this morning again. Morgan Stanley, Bank of America, we'll get into it. Dow, up by 0.4%, up 176 points, 44,675, and the Russell up by more than 1%. Bitcoin, yeah, no real bid in Bitcoin. Keep your spikes up in crypto, folks, because if Bitcoin was trading with the NASDAQ 100, which it had for some time, okay, there is no bounce right now in Bitcoin. No bounce. And this is a critical area of about 109,000, 110, of course, the very important critical area, just mentally that number, but Bitcoin down another $1,200 right now in the session, off 1%. Ethereum down about 1% as well, 4,095. Crude chopping around. We're sitting right now up 52 pennies at 59.22 on crude. You hit a low of 57.68 yesterday. Cheaper crude prices. And another day, another gold high, folks, 42.35. We got gold trading at $4,204 an ounce, up by another even percentage point. Silver, we hit a high yesterday of 52.49, all-time highs. That's dating back to the highs of $50.50 in the futures. Talking about 1980, the Hunt brothers cornering that silver market. Silver up another 60 pennies at 51.21. We jump over to copper right now. Copper basically flat, trading at 5.01. We check in on platinum, up another 0.4% or $6. Check out this run platinum's had, right? You talk about a run in the middle of potentially a 1-to-1, A to B, C to D. Bring it all the way to maybe 1,900. Nonetheless, you got platinum up at 16.84, and you're talking about from a run in April of doubling in price for platinum. Quite a run indeed, and you back platinum up, okay? Look at these runs that platinum had last time. 2008 when Meta was rocking, 2011, and then platinum goes dormant from 2015 until where we were on that run beginning in April. Look at the volume in platinum as well. All right, we jump to yields. So what's interesting is this market was deteriorating. Okay, we had some big negative selling days in the market. We had quite a bounce back. Yesterday was a turnaround Tuesday like we haven't seen in a while. And while that's been happening, right, stocks sell off, and what happens? Well, there's a flight to safety, right? Stocks sell off. You see it happen on Friday. It's actually how markets are supposed to work, as in people taking money out of equities. Where are you going to put it? You're not just going to leave it there doing nothing. You might as well have earned some fixed income. Okay, you might as well earn and put that in a risk-off trade like fixed income. So what usually happens is you sell the equities, fixed income rises in price, yields drop. So as the market sells off, you have the price of fixed income going up, causing the yield to go down, right? Well, this market has recoiled magnificently, right? We are again pushing all-time highs with the S&Ps at 67.33. You're talking about highs out here within about 1% of all-time highs at 68.12, right? All things considered, we're at the upper echelon on the S&Ps right now. NASDAQ 100 sitting comfortably above 25,000. Dow approaching 47,000 yet again. We got highs out there, yeah, within 1 to 2% above where we are. And even the Russell participating, Yeah, that's an all-time high. We're sitting at all-time highs almost to the tick in the Russell. Now, I say that as in yields have dropped as the market drops, but when the market recoils, the yields have not risen again, right? Yields are stuck. We're at 4.02 right now. 4.02. We got a Fed meeting 2 weeks from today, Chairman Powell. And yes, while yields have not dropped, what has dropped? The dollar. So that part of the benefactor being gold, driving to new highs, but gold's been strong no matter what. Doesn't mean a weak dollar won't help it. As a weak dollar helps gold, it sure does. You hit those highs overnight on a dollar dropping to 98.70, 98.70 and change almost. And yeah, gold up by 1.15%. All right, we jump around in this market, and let's kick it off with Morgan Stanley. They beat Goldman in a record quarter. Yeah, total revenue, $18.2 billion. The market was looking for $16.6. How about that? Wealth management business, $8.2 billion. Quite a number. Revenue from trading stocks up 35% to $4.12 billion. Yeah, Goldman takes in 3.74. Look at those numbers, man. Now, I think I saw in here that they have no, let's see if this is right, no money for loss provisions. Who did it? I got to pull this one up. All right, we'll get into these bank earnings a little bit more. I think it was Morgan Stanley. They have no money for loss provisions. I got to find this one. I was reading it this morning. All right, we'll come back, folks. We're going to take a look. Morgan Stanley, Bank of America, some other equities are moving this morning. Coming right back. We got our man Teddy Cakestack coming up at 30 past the hour. Always a great conversation as well. Stay tuned, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. So there's the article I was looking at out early this morning. So Morgan Stanley out with their numbers, strong numbers. So you have Morgan Stanley trading in the green. Let's jump over to their charts real quick. So Morgan Stanley comes out with the numbers this morning. You're trading up about $7. Quite an acceleration for the bank. Up from $155. You're trading at $162 pre-market. Now they got a little bit of a lift yesterday as well. And you jump over to Bank of America. Same story. Not quite the same percentage move, but you're in positive territory, up by about $2 on Bank of America, $50 close to $52.30. Now we jump over their numbers. So yeah, Morgan Stanley, loan loss provision, $0. Well, that's a bold statement, man. That third quarter figure marks a decline from a year earlier when they were looking at $79 million of provisions, and from $196 million last quarter. Provisions for credit losses decreased from a year ago primarily due to the greater benefit of improved macroeconomic scenario in the quarter, and lower provisions related to portfolio growth, is as they put it. So hey, they're not worried about loan losses at all. All right, we jump over to Bank of America. They beat estimates, deal making. Investment banking revenue up 43%, the ebb and flow of deal making for these banks, to $2.05 billion. The market was looking for $1.65 billion. I mean, percentage-wise, it is a massive beat. You're talking about a beat of $400 million when they were only supposed to take in $1.65 billion. That's a 25% beat, right? They took in 25% more revenue in investment banking in 90 days. In 90 days, yeah. Feed for advising mergers, $583 million, or acquisitions, yeah. Net interest income, $15.2 billion. The market was looking for a 7.86% increase. They had a 9.1% increase. Strong loan and deposit growth, coupled with effective balance sheet positioning, is as they put it. Yeah, the traders. Equities, $2.37 billion. Fixed income, $3.08 billion. So they raised the lower end of their range for revenue to $15.6 billion from $15.5. Leaving the high end at 15.7. So they're more confident they're going to come in between 15.6 and 15.7 billion. Loan balances, 1.17 trillion. Bank of America. And no loan loss provisions, up 8.4% from a year earlier. The market pretty much estimated that at 1.16 trillion. All right, let's take a look at these banks. Let's take a look at some volume on these banks. Yeah, yesterday was a big pop. Now, you had some big bank earnings already yesterday, right? You had JP Morgan, you had Citi, you had Goldman Sachs. Okay, Bank of America traded higher on those numbers. And then we trade higher today. But you had some nice volume yesterday. Look at that volume spike yesterday. You find a bid in Bank of America, and you're going to get some follow-through today. Morgan Stanley, helped out by the banks yesterday, and you're going to do it again. We were at 151 yesterday, and Morgan Stanley, you're going to be at 162, and you did it with volume. And we're probably going to have volume today again from Morgan Stanley on their numbers. You jump over to JP Morgan. Volatility yesterday, not the same volume you like to see, right? You pull up Bank of America, you pull up Morgan Stanley, then you take a look at JP Morgan. But this is a story of expectations, folks. They had strong numbers, but guess what? You better have strong numbers when you trade from 200 to 318 as a bank in 6 months. Okay, we're not talking growth equities, folks. We're talking banks doubling, tripling in value. JP Morgan right now, Almost $1 trillion company, $830 billion. Folks, we didn't have $1 trillion company until about 2019. JP Morgan is now pushing that level, okay? And it's triple the size of what they were 2 years ago. So it's a story of expectations, valuations, all of that gets talked about a lot in this market right now, probably rightfully so. All right, and we talk about the stock market. Yeah, earnings soothe trade fears as the market plows higher, man. So we jump around. We talked about Bank of America, Morgan Stanley, okay? We're going to jump to LVMH next. Return to growth, LVMH. How about that? Look at this. Equity on their numbers. That's going to be a pop of what, 12, 13% almost? Trading with volatility in Europe as markets rejoice. And we got a weaker dollar, and we got gold at all-time highs. Yeah, let's jump over to the VIX as they point out. Have you ever seen a market continue to push all-time highs with a VIX pushing 20, folks? Something to keep your eye on. Okay, yeah, it's quite the suck out yesterday of volatility from 23 as the market rallied to almost 19. But it's costing some money, okay, to hedge your position right now, folks. And the only reason why is because people see the risk of volatility in this market and they're protecting themselves. NASDAQ sitting at 25,000, so keep your eye on that VIX. It's a big number right now, sitting 1943. All right, let's take a look at the gold contract. So gold's sitting comfortably above 4,200. We had some nice volume yesterday. All right, continuing the escalation. Tuesday's volume well above where you were Monday. Last Thursday is sticking out on these charts. It's sticking out on silver. It's sticking out on gold. It's something to watch. But boy, on a longer term basis, man, it's just not slowing down right now. Gold is on fire. Okay, we did 1.7 million contracts last week. And in 2 days so far, we've done about 400. 2 days you did 300 and 400. So we did 700,000 over those 2 days. So we're having about 350,000 a day. And that's actually what you have to hit. Okay, 350,000 is the average daily volume that we need this week to get above the weekly volume that we had last week in gold. And, you know, gold keeps rocking like this, man. The volume is there for sure. You jump over to silver. Similar story on silver. Now, yesterday's day a little different because gold surged and actually finished higher. We have a red bar yesterday on silver with that volume. You get the red bar from last Thursday, September 9th, 186,000 contracts. We take a look at the weekly on silver, a little bit different story on silver. That was actually a red bar last week with all that volume. Okay, 606,000 contracts, different setup versus gold. Now silver's charging higher, but that was quite a nice extension last week in gold. And I just showed you last week silver couldn't even trade higher. So a little bit divergence. Gold looking a little stronger than silver right now. Hadn't been the case, but yeah, that's the case right now, especially when you take a look at the volume. All right, folks. We're going to have another turnaround day today. We will see. We got the S&Ps up by 46 points or 0.7%. Kind of the inverse of what we started at yesterday, right? Markets. Can we hold on to the highs? We're coming back for the open. NASDAQ 100 up about 100 points. Up about 1 percentage point. Up 233. And we're coming back for the open, folks. Don't go away.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. S&Ps, we open up the session up about 0.6% or 42 points in the green at 67.29. NASDAQ 100 up about 0.8%, up 211 points. The Dow up 0.3% right now, 150 points in the green, and the Russell up by 0.9 or 23 points in the green right now. We check in on some of those tech stocks. NVIDIA shares trading higher in the pre-market. You give it back a bit on the open. We're up by 2% right now. Now, NVIDIA really didn't have the acceleration. We had some divergence yesterday with NVIDIA. We didn't claw back those losses at all. NVIDIA finished at almost the session lows yesterday, pushing 180. This morning, we're bouncing again, up by 2%. AMD, quite a day yesterday, and we're continuing that run, up by 2 percentage points for AMD. You jump over to Broadcom, up by 2 percentage points. Remarkable how 2% is nothing on some of these equities these days. And these equities, you're talking about $1 trillion equities. Tesla shares up by 2% right now as well. You jump over to Apple. So Apple up by 1 percentage point right now. I saw the headline hitting just recently that you're talking about Apple announcing a new MacBook Pro with updated chips. Whoops, just closed that one. See if we can get it back. There it is. So we got new MacBook Pro with updated chips, the updated M5 chip that allows them to run faster. And yeah, MacBook Pro start at $1599. On sale in 7 days, next week. The 11-inch iPad Pro at $999, and the Vision Pro, a dual knit band. I mean, imagine that you have, this is where the Vision Pro's in trouble, man. Imagine the Vision Pro, and what do they tout? Includes a dual knit band to go around your head. Of all the technology the Vision Pro has to focus, which includes a dual knit band, starts at $3,500. That Vision Pro, man. You know, of all the things you could say of a ultra high-tech headset, you focus on the fact that there's 2 knits in that band that goes around your head for comfort. Nonetheless, so that news hits. Apple higher with the market right now. You're up by 1% on Apple. As I saw, you give it back, actually. Look at that. Apple up by 0.4%. Market holding on to the gains, up by about 0.7%. We jump over to Amazon shares. They give back their gains. Amazon flat right now. We check in on some of the banks, digesting their numbers. Oh, Morgan Stanley. They're loving those Morgan Stanley numbers, man. Up by 7%, more than $10, $166. No loan loss provisions. They're crushing it, man. And yeah, when I was talking about, you look at some of these numbers from Morgan, the one that sticks out. We still here? There we are. Was the one I was talking about where they crushed it by more than 25%. Oh, come on, where are you? All right. Too much good info to jump through in there. I lost it. But yeah, you're talking about quite a beat on that investment banking revenue. Bank of America up by 4.3. JP Morgan, all right, they're flocking to the banks this morning, up by 2.3% right now. Goldman up by 0.8% right now. BlackRock participating, up by 1.4% as well. Citi up by 1.8%, and Wells Fargo. Quite a day for Wells Fargo yesterday, one of the winners for sure. And you're up by another 1.6% right now for Wells Fargo. Man. All right. And yeah, this headline hit and saw it in the den. Thanks for posting that. What's happening? And yeah, Treasury Secretary Basil says stock market decline won't deter the U.S. from taking strong action against China. Well, on one side, we saw that the market was willing to go down, this administration, all the way down to 4,800 and change on some of those policies. We'll see how they react if that's the case. But it's quite an interwoven web of course, it's related. And, of course, the market does matter. But the market is not everything. Of course it's not, right? The market's not representative of the economy on certain aspects, especially when you're talking about jobs, lower income earners, etc. But to say that they won't negotiate because the market's going down and that somehow it doesn't matter, well, they pushed it all the way to 4,800. So there's some credit there. But then they also had reprieves everywhere. And if the market hadn't been at 4,800, would you really have a reprieve, right? If the bond market had been acting the way it was, and the bond market's fine right now, man, as we push to lower rates coming at you with the 10-year approaching 4%. All right, you jump over to Stellantis. So yesterday we were talking about Stellantis, the Jeep parent, in terms of overhauling their Wagoneer, bringing down the price. And yeah, now they're going to invest $13 billion in the U.S. manufacturing operations over the next 4 years. They're going to add 5,000 jobs to that domestic workforce and involve new products in Michigan, Illinois, Indiana, and Ohio for 2029. $13 billion. The plans include bringing new vehicles to all those plants. So U.S. sales peaked in 2018 for Stellantis when it was Fiat Chrysler at more than 2.2 million vehicles. Sales last year were down 42% since then. Their CEO got ousted, and they got a new plan, and they're going to be selling Wagoneers at about 65,000, not 110,000. And I generalize, but yeah. They made a play to go high end, and guess what? They weren't able to compete on that high end, and that's what your stock chart looks like, and you back it up even further than that. And yeah, there's your COVID pullback. Stellantis right now, 994. And you take a look at this chart, folks, for volume, okay? I don't think I have to tell you. Where's the strength in that chart? Now, that's a monthly. Can't find strength there, man. We got selling. Take a look at the weekly recently. The one thing that popped out was this week of July 21st coming into their earnings. You had some big buying there. The low there is about 901. So maybe you got a floor in there, 9. You drove down to their earnings, though, last season to 869, and that had some decent volume as well. We had some nice buy-ins September 29th. On the weekly, it looks a little bit stronger. But man, on a monthly basis, longer term, Stellantis. Some issues there, to put it lightly, and they're trying to basically turn around that entire company after a huge sales slump. They went high-end on everything. They didn't have the brand appeal to do it. And it's a big penalty, and you see it in the stock price. All right, NASDAQ gives up the gains a bit. We got the big dog NVIDIA trading down from the open, but still up by 1.2% right now. You check in on Oracle, up by 2.4% right now. Microsoft flat on the session. You jump over to Google shares, up by 0.7%. All right, folks, we're going to take a quick break. We're going to come back with our man Teddy Kekstad. Great day to have Teddy on. We're going to talk some currencies. We'll talk some yields. We'll talk some commodities. We'll get Teddy's take. We got the dollar right now shopping around near 99. We're at 98.89. We're coming back with Teddy. Be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
He's up by an even 50 points. NASDAQ 100 up by an even 200 points right now. And right now, as we do each and every Wednesday at 40 past the hour, folks, we're going to jump over to our man, Teddy Kegstat. You can check out Teddy's outstanding Tiger Forex report right under that newsletter tab at the front page of TFNN, folks. It's only $97 a month. He's got new issues every week, updates throughout the week when warranted. You gain access to an archive webinar as well, and you always get a 30-day money-back guarantee on top of it, folks. Check out that Tiger Forex report. He's got a couple great webinars under the services tab as well. Capitalizing on time with calendar stock option spreads, as well as Japanese candlestick pattern stock and option strategies. Both of those just $97, folks. You sign up, you gain access to them on your members page, and they're there forever. Watch them as many times as you'd like. Teddy Kegstat, good morning.
Good morning, Tommy.
So we got the 10-year this morning, Teddy. We're touching 4% as I talk to you. We got some dollar action. We got gold at all-time highs. What are you watching most in this market? Talk to me. What are you seeing, man?
Well, the most I'm watching right now is the yen. You know, last week I told you how they were railing into an area where I said, hey, we're getting ready for a nice little sell setup. Friday, we had a nice sell signal, a little bit ahead of where I thought. I thought we might have another couple days. I thought it was going to rally more into this week. And, you know, it's kind of, it pulled back. We had a nice little move, and now it's kind of going nowhere with that. And if you look at the other currencies, we've had some volatility, but I have to say, honestly, like we had all the action on Friday and Monday, and now it's kind of, I think things are quieting down because they know there's a Fed meeting coming up, you know. So I honestly have to say, I think things are going to tighten and start drifting, actually, to be quite honest with you, except for maybe the U.S. dollar yen. With crude riding near its lows, I think you still have some potential, you know, for basically testing support and maybe going lower. I mean, I thought that the U.S. dollar yen was going to get a little higher than it did. The current swing high off of Friday, I have to say, could be, I'm not calling a top or anything like that. I would say that right now you're probably good being a seller against that high. If we get above that, well, then obviously, you know, there's some potential to the upside, but I think you got to still be careful with it, you know. But there's some volatility there and some swing trade action, especially in the yen. The euro and the pound and stuff like that, I have to say you got to be very careful over the next week and a half as we get closer and closer to the Fed meeting.
And I was, you know, thank you for talking about that yen last week. I was thinking about you, man, as that thing was rocking on Friday, of course. And did they come out and say that did they throw any shade saying, you know, we don't want a weekend? What was that move on Friday? Was it a pullback to anything to do or just a market reaction? Do you know? What was that move? Just a pullback, but we had quite the move, right? From 153 to almost 151 after we just traded from 147. Just a market reaction, or was the central bankers in Japan talking? What was kind of some of that? Was it fundamental or just kind of traders out there?
Well, especially with the yen, you know, there's a lot of fundamentals going on. You have the divergence of the BOJ getting ready to hike rates. And then there's potential, especially now, leaning on with higher unemployment rate and what have you, that there may be another rate cut coming in October, the next meeting. You know, I was very apprehensive about them cutting. I was surprised they did it in September. I thought that it was going to take a little bit more time. They did cut the quarter point, and you know how I was already after the fact, saying I don't think they're going to do it in October. With rising unemployment, supposedly with the numbers, we'll see how that ticks into the actual meeting. The talking heads are leaning on it. The pressure is with the consensus, you know, is that they're going to cut, but then they've been also saying that for a year. So, you know, they finally get one. Sure. Doesn't make them right, you know. So, and the market already has three cuts, you know, three quarter points already factored in. We've only had a quarter. So, yeah, whether or not they do or don't do doesn't really matter. You know, I think really we have to get to that point where they cut at least another quarter and then cut one more time again, and then we can start to look at really trend breakouts as far as, you know, higher prices and lower yields in the 10-year and the 30-year, you know. So with crude oil, now here's the interesting thing with that, you know, the big, you know, Friday was a big sell, you know, it had a nice sell-off on Friday. No matter what, across the nation, everyone's seen at least a 10-20 cent drop in gas prices, you know, because of what happened on Friday. that is a good indication of what's going to probably happen going into, the next couple of weeks, because on Friday last week was when they opened up all the oil leases. They overturned the Biden, restrictions on oil. All the leases are opening up. They're going to drill. Gas is opening, natural gas is opening up, all kinds of other, things in the whole industry, as well as with that new government backing, if you will, the oil services industry is going to start flowing also. So when you start getting those things back online, especially with the more potential for obviously more supply domestically and what have you, now we're looking at, hey, yeah, there's every reason to believe that oil is going to keep pressuring support, and rallies are rallies to sell, and that's very good for the U.S. dollar yen trade, because if now you have a government-supported backing of the oil industry saying, hey, we're supporting you, we want you to flourish and help grow once again, for the country, that means what? No matter what is going on as far as production costs, that the cost of transportation is going to go down, at least as far as oil. Oil, gas, diesel, the whole thing, everything is going to start to go down over the next year. That one variable. I can't say about all the other variables that can cause inflation and what have you, but that one variable, which is a huge one, will go down. And that also is especially reflected for the consumer. No matter what, your grocery prices, it's going to be really hard to keep having inflation in food if the cost of transportation keeps going down. So you're going to have another reason for food inflation, or even keeping it at where it's at, So we should start to see that, at least in certain sectors, and this is going to take, a good 6 months to a year, but we will start to see it. And this is definitely solidly, we know these are trend fundamentals that are setting off, that are going to be in motion. And that's big for the U.S. dollar yen trade, because just think, if oil can stay just even remotely in the, say, I don't know, mid 50s to mid 40s, well, what does that do for trade with Japan? Well, their cost of production goes down, which means that even whether there's tariffs, no tariffs, taxes, inflation, or whatever, anything we get importing wise, the cost will go down, irregardless of dollar fluctuation. Your cost of, what I'm saying, like that one variable. Yeah. So I think we really have some interesting swings that are going to come in across multiple markets over the next, I would say, you're not going to see it until probably February, March. But I think your first quarter numbers are going to really surprise people next year. Like, they're really going to hit people where they're going to be like, whoa, we didn't see this reversal coming. Well, that's because you weren't paying attention to what's happening right now, and, there's a lag, certain things are leading, lagging. So
I love the walkthrough, man, and I agree. And those rates, folks, they got 2 cuts. I was looking at just Fed Fund Future, it's like 95% chance the market thinks. So don't, and I agree, as in they've priced the 10 years at 4%, folks, because they already know we're getting maybe a couple cuts. We'll see where we go from there once we get past that coming into the year. Teddy, great conversation as always, man. I appreciate it. We'll talk to you next week.
Thanks, Tommy. Take care.
Thank you. Folks, we'll be right back.
But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Always a great conversation with Teddy. And just to finish it up, because as he was talking about, there are some great points, okay? And for those, you look at where this market is right now, okay? You're looking at a 10-year that's at 4%, okay? Now, whether we get these cuts or not, you better realize that the market is expecting the cuts. They're already priced in. The chances we get a cut in 2 weeks at that October 29th meeting, 96.7% right now. You go out to December, the chance we get 2 cuts by December, 95.8% chance. 95.8. A week ago, that was only at a 79% chance. A month ago, it was only 69% chance. This is why rates are drifting lower. So do not expect to get that cut in 2 weeks and rates to drop. Don't expect to get that cut in December and rates to drop. It's already priced in. Okay, and as Teddy was talking about, we get into the first quarter of next year, then you're going to get to find out if we get more cuts. Okay, and yeah, if you get that December cut and then they're pricing in a January or a March, depending on the data, yeah, but things need to shift because you go into January and then we get a 50-50. Okay, so the market's sure we're getting an October 29th cut. The market's certain we're getting a December 10th cut as well. But you go out to January and they actually think it's about 50-50. You go out to March, 50% chance we get 1 cut by the so there's some room there for yields to move in the beginning of next year, but right now it is baked in to this market. All right, and yeah, they're talking about these energy stocks in the den, rightfully so. Oklo. Now this company, okay, we'll finish it up with this article from the Journal. I had it pulled up anyway, and yeah, they're talking about Oklo, folks. They're talking about Oklo in the den, and they should be. Now this company, Oklo, okay, is a nuclear startup backed by Sam Altman. They have a market cap of $26 billion. It's probably a bigger number this morning. And they have no revenue in the past 12 months. Now, that company, okay, is developing small modular nuclear reactors that use non-water coolant, liquid metal solium, enriched type of uranium fuel limited in supply. Okay? Yeah, energy stocks. The frothiest AI bubble is in energy stocks. Well, Oklo, there you go. How about it? Up by 7.7%. S&P's on fire. Folks, stay tuned. Basil, he's battling a few technical difficulties. I think we're going to